placing your bets to end on that analogy, let's look at the oil price. Who's betting what on this one? Because the decline in the long interest component to the story by the hedgies always tells an interesting story at any given point in time. Let's get the very latest as he prepares for his night flight tonight. Running through into the Middle East, Pete McGuire, but coming to you live first from XM.com in our Sydney CBD studio. Welcome, Pete. We'll get on to the Middle East connection in just a tick, but let's just look at the long interest or otherwise from the hedge fund camp. What's been going on the last week, in your estimation?
Well, good afternoon, Carson. You know, when you look at the CFTC, that's the Commodities Futures Trading Commission, we saw those numbers and they're well down leading into that March 7 number. So the hedge funds and, of course, the money managers have cut positions, and we've seen a very large sell-off, as we know, nearly 10% in the last 5 or 6 days.
Purely a Fed-led sell-down, or more in store than that?
Well, I think so. I think that the money managers have cut those positions. They've taken on board that it was a very crowded trade, and we've discussed that over the last couple of weeks together. And more importantly, they've looked for other opportunities. We had the the second largest day on Friday as far as option trading on the NYMEX for West Texas Intermediate. So that shows you that that large sell-off, traders were all over it, gathering momentum and, of course, hedging positions. So we had that large inventory build, nearly at record numbers. So, you know, we've got a lot of interesting components for all that oil trade, Carson.
It's down 8.8% since that midweek last week EIA inventory report.
Yes.
Where we saw the record high inventories. Do you get a sense that the worst is behind us?
Well, in some ways I do, but I wouldn't be surprised to see further numbers, possibly a 47, 46 handle. I know that's fairly bearish, but I wouldn't be surprised to see it sometime, possibly this week or next week. I think things will stabilise. More importantly, you've got to look at what Janet's prepared to do. Of course, where Theresa May runs as far as Brexit this week, there's a lot of very important global events that are going to play out over the next, 6 to 8 trading sessions.
Don't forget either that last month's jobs figure was revised up.
Well, that's
from
exactly
227,000 to 238.
Well, that's true, and more importantly, President Trump is saying that you can bank on these numbers, so I'm sure that I wouldn't be surprised to see a higher number than what we achieved on Friday after they are revised up, so that's all going to play onto it.
You're not auditioning for Sean Spicer's role, I take it?
No, I'm not.
Sounded like you were.
I'm certainly not. You've got a very capable man filling that role.
All right, capable's debatable. But we'll move on. I mean, he had the pin on upside down.
I noticed that.
You did notice that. I mean, couldn't fail. But right, let's talk about gold because I mean we have seen a horror run, down about 4.25%. That's about 53 US an ounce in the last fortnight.
Yep.
So
9 sessions down. We bounced today off 12.01 to about 12.05 in Asia. Sorry about that.
No, carry on. You're on a roll.
And we saw that bounce. I think it really had a lot of resistance around that 1200 number. Can't crack through it. And again, it's time out, waiting to see what how she performs over the next week or two. And that's going to add, I think, possibly further momentum to the downside. You know that when you look at the CRB index, last week or the last week and a bit have been an absolute horror story for the commodity sector. Energy, grains, agriculture, and of course the precious metals all taking a severe hit, and base metals as well. Look at copper down 3.5% for the week. So all of them have copped a hiding, and I wouldn't be surprised to see a little bit further weakness.
Pete, it's Adam here from Shores.
Hey, Adam.
How you going? You know, we've seen we went through the biggest movers and losers today, and the biggest movers was all gold, the five. I know you sort of commodity, but have you got a pick in that space for a direct share?
Well, not necessarily. I mean, look, they've got some major issues. All of the producers have got to take on board what they're going to do as far as where Janet plays. And if we get multiple rises, and I think that there's every chance with these better than expected numbers as far as unemployment, the US, we all know that it's booming. So in turn, if you get a couple of rate rises, I think it's going to put a handbrake to a lot of those domestic miners. And where does the US dollar trade? What happens to our Aussie dollar? And so on. So in Aussie dollar terms, Adam, it may not be a bad thing, but certainly in US dollar terms.
That was my next question. Where do you sort of see that US Aussie dollar combo?
You know, that's a hard one. I think if you get a blast off over the next week or so, you could have, you know, further momentum for a stronger US. You may see a 75 handle, though it's hard to speculate. If you put a graph up over the last 6 months, what the Aussie's done, it's been all over the shop.
It has.
Very hard to speculate. You've more or less got to ask, Adam, what day, at what time do you expect the market to be? Because it's hard to put a forecast out because weeks travel so quickly.
And we're going a little bit speculative here, but we've seen a fair bit in cobalt lately. Have you been following that one?
I've kept a little bit of an eye on it, and of course the other base metals and rare earths and so on. They've all taken a bit of a hiding. I haven't kept a, you know, in the sense of a graph on cobalt, but some of those markets, we've got to understand that, you know, from a China demand picture, if you look at iron ore, it's at record as far as back to 2004, 130 million tonnes on wharves and in stockpiles. And so the cobalt story, whilst you may see an opportunity there, I don't know whether it's that liquid.
Yeah, it's interesting times. I mean, I'm also just wondering about the funding needs of some of these mid-tier miners that, you know, of course, it's a speculative venture in large measure. They are still in their exploration phase, let alone production. Now, the window on funding, if we're eyeing the Feds doing what it's 100% priced in to do this week, what are your options? Are you surprised, Pete, that there's not been more issuance coming ahead of time?
Well, yes, I would be, Carson, but there's so much... if you look at the Australian situation, I think that we're certainly got some headwinds ahead of us, and whilst we had a nice run-up as far as ore, there are many of the other markets that have really had a bit of a hiding over the last year or two, and they're starting to rebound a little bit. But I think you're going to possibly have a... how it plays out over the next 3 to 4 months is going to be crucial for where we see this time next year. There are so many components in the pie, as we mentioned. Where is energy playing? What's happening as far as strikes with Peru now and copper, Escondido and Grasberg? Where do the big miners trade? And more importantly, what happens with iron ore if it gets washed out due to excess capacity in China?
It's very interesting as well, because this comes on a day when in the real economy, and you're talking about the China link, the one kind of, you might say, most closely aligned exposure that you can get on markets to the housing story being McGuire, if you want to sort of do a pulse check on the health of suburbs and regions where they have their franchises. You know, Bell Potter puts a buy on it, but not because of the sum of the parts, but or rather the whole company, but on the sum of the parts, specifically the valuation of the annuity business, so the property management and mortgage broking, rather than anything else, where there's much more volatility on earnings, like company-owned sales. So does that speak to what you're observing in the real economy, Pete, of late? How do you judge it?
Well, when, you know, you're seeing, you know, those auction clearance rates are still record highs, and you're seeing, you know, there was, I saw on the paper on the weekend, 900,000 price doubled in, I think, around about 8 or 9 years for a one better in Sydney for the viewer's standpoint. And I don't believe it was, you know, anything magnificent in the sense of overlooking Bondi Beach or Point Piper, but that just shows us that there's been a very strong uplift. There hasn't been necessarily a strong uplift as far as wage growth, but more importantly, I think the stimulus has been a lot of self-managed super funds, Carson. We've discussed this over the years, have found a home, figuratively speaking. They've moved out of equities and moved into real estate.
So it's hard to ring the bell, figuratively speaking, is it? Metaphorically speaking, for that to end, because what would arrest that trend?
I don't know. You've got growing construction. You've only got to see the cranes across the Sydney landscape. You fly over it and you see cranes, you see construction. All the builders are busy. You try and get a plumber and it's nearly mission impossible. The tradies are absolutely having a boon in Sydney. I mean, they're just... you know, really doing very, very well for themselves, and you're getting migration from, you know, the miners that may have been a plumber working on a mine somewhere in Queensland or WA are all moving to Sydney because of a dramatic shortfall. as far as those trades. So I don't know when it ends. We've got net migration. It's growing economies, New South Wales. And if you listen to the Premier, there's nothing to worry about.
Yeah, the tradies rocking up in Q7s, Audi Q7s, for all they're worth. It's kind of...
Yeah, leave the Ferrari at home.
Yeah, I was going to say, that's for
But we did see Aussie John selling his penthouse in Point Piper today.
Oh, hang on. So he had rebuffed. Wait a second, this is breaking news. I mean, why aren't we on this earlier?
I did see it on the AFR.
So because he had knocked back 100 million from the Chinese just recently. So you're telling me he's blinked?
Yeah. I just read the headlines.
All
so
right.
we'll have to look into that.
Well, Pete, your reaction, because Honest John had said, as reasons for rebuffing it last time, Pete, he had said these prices will double in 10 years. And now he's gone and sold. So what do we make of that double talk?
Well, he might be employing the capital somewhere else. I'm not sure whether... I haven't seen that he's sold, and I'm listening to your comments, and I'm understanding that, and it could well be. You may see a 10-year doubling. We've had a dramatic run-up since really 07, 08, or pardon me, 08, 09 in Sydney. It's been very, very bullish. When does the party end? Well, no one wants to miss out on it, and at the moment, it just seems to be gaining momentum. So that's the situation.
Because it was sort of strains of Mar-a-Lago, wasn't it? That Simon that Simon Pad, as far as the ballroom, etc. So I'll just give you the good oil on it. He has sold now for
13.3.
Hang on, so 13.3. But hang on, this is not the
Point Piper penthouse.
This is the penthouse. This is not the whole shebang with the ballroom.
No,
I was going to say he knocked that back for 100 million.
No.
All right, okay.
Only a penthouse in Point Piper, Carson.
Yeah, only exactly. How deflating. Sorry, I thought we had the real breaking news.
We were talking about houses. We're talking about apartments.
Well, yeah. All right. The day that happens, we'll have some bells ringing.
I mean, 100 million doesn't buy you a lot in the Middle East, but it buys you a fair bit in Sydney.
Speaking of which, we've got to get out of here. You're flying out of here. Just sum it up in a sentence. What are you going to do? Fact find?
Yeah, fact find. Right. Off to United Arab Emirates, talking to oil people, and looking forward to how OPEC plays 25th of May.
Don't get caught in the shifting sands. We will talk to you when you come back.
Thank you.
Thank you so much.